Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Probably something worth looking at, even though it's not a vehicle itself on the ISE, but just provides a proxy. So look at the dollar index. It's always a good chart to kind of keep in mind because the dollar is part of every major cross that goes on those on the ISE options. You can look at the dollar index for the overall strength as far as how it compares to against the basket of currencies. The euro is a big component of this. I think the euro accounts for like 56% of this cross. I want to say the yen is like 13 or 14. British pounds in there, Swiss francs in there. But I always, before I would do any of the currency crosses on the ISE to get long the calls or puts, I would just see the overall state of the dollar itself because the dollar is such a major, is obviously the major cross in all those currencies there. And yeah. So and then the last thing I want to look at today is the U.S. dollar Swiss franc. And we see that obviously the whole underlying component being the Swiss with a positive current account would fare better than the European brethren. The dollar is still managed to mount an interesting rally here, but the overall range, looking at the daily chart for the last couple of months, we've seen some definite compression in volatility and applied volatilities amongst a couple of these big currency crosses. Even the euro as well looks like that. The Aussie looks like that. Canada's kind of grinding up. I think that the CAD actually has a chance to break down. I think that the yen are two crosses I want to be long volatility, where the two crosses, and these right here I would just stay out, so let them emerge and let them get a rhythm. Again, I don't want to take on exposure in the market unless there's a rhythm that's developed, a rhythm that's been put into play there. And that's something I just want to be leery of and advise you guys on. The big position I'm babysitting right now is this gold straddle right here. I think that gold is in a very, very interesting spot. If I look at this, the trend line developing, we have in play here, fib retracements. I actually came out with a video blog on my website for the members last night talking about the down move that I saw happen in gold today. But what's more interesting and more important actually is we've gotten this big pullback down in gold. We're coming to these fib levels here. Thought that this failed to 50 moving able to set that up, but I think we actually go in gold the next day. We put in a bottom here, all right, in this level. We get positive bullish divergence here, and then we explode back to the upside again. And I think that I'm building myself accordingly. I'm going to actually slightly delta positive today. Literally, lost some implied vol in here. Got long the straddle at the 950 spot. Came in, we were like at 965 when I got long 950. They got me early, but then the last couple of days in here have been actually able to make some pretty nice trades and whatnot. And now I'm starting to position myself where I'm going to really pretty much move all in and use my puts as a backstop. I talked about that earlier. So again, I'm long the 950 calls, long the 950 puts, but my delta changes accordingly as we move throughout. So right now I have a short delta of 60, meaning 60% of the initial position. So I'm long 60% against those puts, against my overall exposure. And then my hope is that we can bottom out in here next day or two. I think Friday, maybe even Monday, we put in a big day, and we begin to head back up again. And I think we can even take off to new highs again in gold because, we've seen a sort of inverse correlation between gold and the S&P as gold has become the new risk aversion play. It's come away from the yen, and that's very important for you guys to watch gold. If you're going to trade currencies, you need to be aware of what gold is doing. Because in many ways, I think gold functions as the global currency out there. And so, I'm trying to give you guys functional tactics that can help you more profitably trade these ISE FX options. So that's what I'm saying here. Because the yen is clearly no longer the risk aversion play, completely decoupled from that role over the last couple of weeks. And there you go. So I'm going to go back to and I know I covered a lot of stuff, but I will be speaking at the Las Vegas Money Show on May 14th. For those of you that are going to be there, if you want to learn how I come up with my price targets and everything, my book, One Shot, One Kill Trading, discusses all that stuff. It can be, I believe it's on Amazon. If not, you can go to my website at osoktrading.com. And if you if those of you who really want to make the next step as a trader and get a sense of all the markets and all the stuff I do, I consult with a number of hedge funds and professional traders, and also work with beginning traders as well if the situation is right. It's more my preference to meet with people who want to make the next step. If you're a trading hobbyist and you're not sure what you want to do, I'm really not the guy to hang out with. But if you want to really make the next step and want to do this for a living and want to go next level, I'd like to work with you. So I am putting on a gamma trading options webinar. It's 3 hours, Saturday, March 22nd. It's $99. I'll go into much more detail on a lot of this stuff and go from there. And now's a good time to go and hit me up with questions. We're 45 minutes into this. I got about 10 minutes for Q&A, and then I got to bounce before I get caught in the Midtown. Actually, I'm already caught in Midtown traffic, whatever. But I walk home. I live 6 blocks away. So questions from the audience, please. I'd love to answer them. Anyone, any questions? On my market calls, on my viewpoint, anything. The question is, do I look at gamma theta ratios? Yeah. It's a component that comes in TQG. I use Black-Scholes model in terms of option pricing, and depending, the various ratios, I'll set up, not synthetic, but I'll set up, spreads that reflect the kind of theta or gamma risk I want to take on. If you email me privately, though, I'll get into more detail on that, Mike. But in the case of the gold right there, I took on a pretty vanilla, just long straddle position. I just really thought the gold was going to either implode or break out to new all-time highs. I didn't want to get too cute with it. Patrick asked me if I noticed a full moon effect on currencies, and I'm repeating these questions because this is going to be recorded and I suspect put up on YouTube. So I don't think they can see the questions from the panelists. So I'm trying to repeat everything back again. Patrick, I haven't studied the full moon effect on currencies. I don't doubt it. This is an emotional game. The moon affects us and our cycles and everything else. So it wouldn't surprise me if there was some correlation between the full moon and currencies. Any other questions? Anyone have a position that they're curious about, they want me to comment on? Anyone in an option position right now?
Thank you so much, John, for joining us this afternoon. And I wanted to thank everyone who was able to participate. And if you want to, listen to the recording or you weren't able to stay for the full session, definitely feel free to go to our site, isc.com/archives to listen to the recording. It's also going to be on YouTube, as John mentioned, and on iTunes. So next week we have Randy Frederick from Charles Schwab discussing dollar calendar trading strategies. So we look forward to having you back then. Thanks again.
Thanks a lot, guys. Appreciate it.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.